Hey, kia ora everybody, Chris Farhi here from the Bayleys Insights Data team. We've got Ankur Dakwale to talk about the biggest news in New Zealand real estate. Now Ankur, we've got a pretty good lineup today. We've got the latest housing market stats from the Real Estate Institute. Stats in New Zealand released their latest inflation data, which was pretty exciting for the geeks out there. We've got our latest Wellington CBD office and Wellington industrial reports, bit of content from Singapore and London, and of course the property of the week. So Ankur, latest housing market statistics, what do we know?
Yeah, so REINZ have released these last couple of days, so these are for March 2023. New Zealand median house price is now $775,000. Now this is up, up from $765,000 in the previous month. Auckland house prices are still above $1 million, so $1,600,000. These are slightly down from last month when there was $1,005,000. Quite interesting is that the house price indices, which look at the quality of houses sold, very slightly down across New Zealand.
The interesting thing there as well is you had a couple of regions moving up.
Yeah.
So I think when I looked at the data, it was Northland, Taranaki, Manawatu, and Canterbury, very slightly up. Sales volumes though still looked reasonably low.
Yeah, compared to a typical year, we had about 5,877 homes sold across New Zealand during March, and this is quite low compared to a typical year that we've seen. And we also had the Stats New Zealand that released the latest inflation data. So what do we see there, Chris?
Yeah, so that was pretty interesting. So the inflation data, a lot of commentators were picking it's going to be about like 7%.
Yeah.
Latest results, so this was through to 31 March, so Q1, 6.7%. So that was actually quite positive.
Yeah.
Commentators straight away coming out saying that it's probably going to be positive for the housing market through lower interest rates. There's also a little bit of an international comparison that you mentioned.
Yeah, so what was quite interesting in the release from Stats New Zealand is they released a table with comparison of New Zealand versus most of the other countries as well. And it was quite interesting to see that New Zealand's inflation is similar to countries like Australia and UK at the moment.
Yeah, quite tricky because people, I guess particularly the local media, tends to focus on all the issues in New Zealand and how that's tracking into inflation, but then you see the global comparison and everyone's pretty much in a similar position except for maybe Japan at the moment. But they've of course had those long-term issues with maintaining growth. So next up we've got Bayleys Insights Data. So our team released the latest Wellington CBD office and Wellington industrial reports. Ankur, you did all the work on this. So do you want to tell us a little bit about it?
Yeah, so we released these last week. So these are the Wellington CBD office and industrial. So in the office report, we note there's a continued flight to quality. So occupiers wanting better quality space to bring their staff into. But there still continues to be challenges in terms of seismic issues. Now, this is not just for the tenants, but for the landlords as well. And in the industrial space, we note that there's a shortage of industrial space, so very low vacancy rates, which is causing there to be more off-market lease transactions happening. Alongside this demand for more 3PL solutions as well. So 3PL companies that have the space, companies want to use that now.
Yeah, so sort of companies going for those short-term solutions. Yeah. I guess what will be interesting is how that goes through to the 3PL market, because I imagine they'll start to fill up pretty quick as well. The other interesting thing across both of those reports is if you went back maybe a month ago, we released the Auckland CBD and Auckland industrial reports, and some very similar themes across both of them. So Auckland CBD, you've got that flight to quality, companies wanting better space, and what that means for the secondary quality assets. And then in the industrial market, Auckland also real tight. So interesting to see that same issue reflected in Wellington. I think that one of the big points of difference in Wellington, though, is just that uncertainty around seismic issues, particularly the yellow chapter seismic assessment guidelines that have added a big sort of level of uncertainty around how parties want to treat those seismic strength assessments and strengthening.
Yeah, and even on the industrial front here, we're looking at just a lack of land developable within the Wellington city region. So that's causing occupiers to look further north, places like the Hut and further up as well.
And then we also had some news from Air New Zealand, so starting work on a new hangar. Do you want to tell us a little bit about it?
Yeah, so this hangar is quite interesting because it's going to be the largest single-span timber arch hangar in the Southern Hemisphere. It'll be called Hangar 4, which is 1.5 times bigger than Hangar 3, which was built in 1980. So, it's quite a big hangar. It'll be largely built from plantation pine that's been sourced from Nelson. And what's quite interesting, and this is the first time we've heard of it, is the building is going to be aiming for a 6-star green rating once it's built.
Yeah, and it's interesting. So those 6-star ratings, that's world leadership. So that's the top level that's currently available in New Zealand. First time I've heard of a hangar being Green Star certified, although we are seeing a bit more activity in that industrial market around green ratings there. So that one's pretty exciting. Hopefully we'll get some pictures of the construction over time. Maybe someone from Air New Zealand can flick us some pics. So moving offshore, right, global partner Knight Frank released their latest London office spotlight for Q1 2023. So rent's generally stable, take-up of space is down slightly across London, but space under offer is up. So there's about 300,000 square metres of space under offer at the time of the report. Vacancy rates are pretty interesting.
Yeah, so vacancy rates in London across the whole all submarkets is about 9.6%, which is quite interesting because you got Auckland CBD at about 10.9% and Wellington CBD at 6.6%. So it's in the same ballpark and arenas and similar trends there as well.
Yeah, also quite curious because on some of those bigger cities like London, New York, you're seeing a much stronger impact from hybrid working and work from home and all of those sorts of things. But the level of vacancy is actually not that much higher than what we're seeing in, say, Auckland, although obviously noticeably higher than what we're seeing in Wellington. So yeah, be curious how those hybrid working trends progress over the coming year or two, particularly as a lot of economies start to soften and maybe people need to be back in the office so that they don't get restructured out of their businesses. Over in Singapore as well, we've had the latest retail market update. So that's pretty interesting. Something I wasn't aware of until we were chatting about it is Singapore's still had COVID restrictions in place until February this year, and they've only recently started to loosen those restrictions. That's obviously been positive for the retail market.
Yeah, so Singapore reset their COVID restrictions to its lowest level, so that's given confidence to the hospitality and the F&B market, and where they can look and plan for the future and growth as well, and that's caused rental uplift that's happened in the first quarter. You can see there's more confidence in the market now because of that, even though there's an uncertain economic outlook.
Frank also called out a couple of subsectors that are showing really good expansion, and this is mainly experiential retail and lifestyle type stuff. So you've got health, beauty and wellness showing a really good expansion over there. And then finally the GST rate in Singapore, this is just a little interesting nugget. They've increased their GST from 7% to 8% during January 2023, and then if you go forward a year to 2024, they'll be increasing it to 9%. I don't know what we do with that fact, but it's kind of interesting. Finally, to wrap up, property of the week, right? So, Ankur, you've got something pretty cool in Papamoa.
Yeah, so my property of the week is Opal Drive in Papamoa, and this has been nicknamed Casa Coco. It is 4 beds, 3 baths with a heated saltwater pool. Featured in Your Home and Garden magazine. It's got custom pieces from all over the world. So it's got tiles from Italy, lampshades from Morocco, and the bench top is made in Spain. So if you want to learn more about this, please get in touch with Conrad Doyle or Karen Flowerday from Bayleys in Mount Maunganui. And Chris, you got something in the South Island for us this week? Yeah,
so I'm down in Queenstown this week for Property of the Week. So 8 Kahiwi Drive in Lower Shotover. So this is a recently renovated 3-bedroom, 2-bathroom home. It's got double garage, sitting on 2,200 square metres of land, which is awesome. It's got landscaped gardens and a pond. Centrally located for that perfect Queenstown lifestyle. And if you want to learn more, you can contact Hemi Brown from Bayleys Frankton. Well, that's it. We'll wrap it up here. So thanks very much, Ankur.
Thanks, Chris.
And we'll see you next time. Ciao. Yeah.